You can argue about 1%, 2%, 3%, 5, 6, 7, 8. We're arguing numbers here, but ultimately nobody disagrees that the money is losing value. And on the other hand, Bitcoin has number go up technology, wherein the money is gaining value. So you're not going to get these massive hyperinflationary collapses of fiat money, but you're just going to witness the fiat economy um, grow less and less as a percentage of the global economy.
We are going to see Bitcoiners become more wealthy, more influential, and be able to think and act more clearly. And this is just something that will happen over the longer term. And so as other people see that, there's a social feedback loop. And so people will see that and think, oh, wow, hang on, what's he doing? Oh, it's working out pretty well for him. I'm going to start doing that too.
What's up, Sats fans? Welcome to Swan Signal. We got another great show for you guys lined up today. If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today. We got two excellent guests that are prominent educators in the Bitcoin space. We have Austrian economist and author Saifedean Ammous. He's author of the Bitcoin Standard, the Fiat Standard, and an upcoming book, The Principles of Economics. And then we have Stephan Livera. He's the host of the popular Stephan Livera podcast. I'm sure you guys have listened to it before. And he's also the head of education at Swan Bitcoin. So welcome, gentlemen. I'm really excited for this conversation.
Thanks for having me.
Yeah, thanks for having me.
Yeah, so I wanted to discuss a lot of things today, but the first thing is over the last month, we had a banking crisis. Once again, there's a headline of banks failing across the board. We had a lot of regional banks in the US come under pressure. We had the Fed and the Treasury and the FDIC come in and save the day, quote unquote. Let's just start there. Like when you guys start to see these headlines of banking collapses again, reminiscence of 2008 and other banking crises that happened across the world, what initially went through your heads? Let's start with Stephan. Why don't we throw it to you, and then we'll get Safe's take.
So we had these different banks fail. We had Signature, Silvergate, and one other, I believe. But anyway, the point is really that these banks, they're failing for different reasons, right? It's not all the same. They fail in different ways, but the system has to just keep re-upping the thing. They have to just keep trying to find a way to kick the can and keep the thing going. And so that seems to be the moral of the story. The moral of the story seems to be, if something goes wrong, let's socialize the losses. And so unfortunately what happens is those who are more politically connected, they get bailed out, or they, as a depositor, they get made whole, and the system takes the cost. And so in this case, what we saw was the FDIC is sort of riding to the rescue, saying, "Oh, okay, well, we initially said only people with a deposit balance up to 250,000 will be made whole, but actually, we're going to call it systemic risk, and now we're just going to make everyone whole, even if your balance is over 250,000." And so, what does this mean? Well, let's see it like this: FDIC has to be able to cover the amount of balances that people have, and FDIC is funded through contributions by all of the banks. So the depositors at the banks are effectively paying for that. And really, who's backstopping this system, right? What happens if FDIC runs out of money? Guess what? That's the taxpayer on the line, right? The Treasury is going to have to, so there is no free lunch. Someone somewhere is going to be paying for this. Either the depositors are paying for it through increased insurance premiums. The, Treasury is going to, they're just going to have to print more. Or and the other way is they are pushing that cost out onto everyday people who are holding dollars or holding bonds. You are just being devalued. So that's I think the simple way to understand it. But the high level understanding of it really is that the system is inherently fragile, and that's just a consequence of fiat fractional reserve banking. So that's how I'd answer that.
Saif, do you have anything to add there?
Yeah, I'd say I think I agree with Stefan. I think the issue fundamentally comes down to that. And I think this is the nice thing, perhaps the silver lining to the whole thing, was the fact that a lot of people simply started asking the question, why can't I just have a place where I can just keep my money and not have to worry about all of these things that are completely out of my control, Argentinian bonds and interest rate risk? Why can't they just keep the money? And when you think about it, basically, even with how bad inflationary money is, a lot of people would happily take a service that really just offered physical cash moving around, where you actually had to put up physical cash and they actually moved your own physical bills. Even something so expensive as that, people would be willing to put up with it, even with the cost of moving it around and even with the inflation, because at least it allows them to complete payments. It allows them to move their money around. This is such an important thing that people will put up with all kinds of bullshit, and yet you still can't even have that. Like, you can't just even get the ability to save in a form of money that you can put in a bank and have the bank operate. No, you have to be an unsecured creditor to large financial institutions. It's not up to you. You don't get to choose. You were born to do this. You have to be an unsecured creditor. And who knows? Like, one day something happens and then just the bank blows up and your entire business goes out of business. And it's in a sense, it's like what Max Kaiser describes as financial apartheid, in that you're just stuck on this treadmill where you need to be losing losing your wealth to inflation on the one hand, and then playing the check deposit account casino, where particularly if you're going to move into running a business, you're going to need to essentially become an unsecured creditor to your bank without any FDIC deposit. The $250,000 is not a lot of money if you're running a business in the US today. It's dollars after all. um, but still, you just can't have a choice. You can't move your money around, and it's amazing. This is how the fiat banking system operates these days. You have to gamble, and you have to, you, you know you just witness this whole thing blows up. And like, when they bail them out, effectively it's an admission that, yeah, we should have something like that, except we can't, because obviously we need inflation much more. But why would you bail them out? I mean, this is, if this is not fraudulent and this is just the free market choosing, then why should they be bailed out? Like, if you think they should be bailed out, then clearly a far superior option would be to just give them the benefits of having the option of banking with a money bailment service.
Yeah. Well,
One thing I wanted to add there is that I think a lot of people don't know the system that they are in, right? That's just a fundamental reality. Like, if we saw people even on Twitter, even people who are well-known VC individuals who should have known better, they seem to act as though the bank should be full reserve despite living in a fractional reserve system. They did not even understand that concept. And I'm sure if you just talk to the random man on the street and you ask him, hey, that money that you think you have in your bank account, is it there? Right? They would say, yeah, I think it's there. I think it's all there. Right? That's what they would say. So isn't it interesting that this is the system we're in, where systematically people are being tricked? They are being lied or allowed to believe through an emission. They are being allowed to just believe that the money is there and it's available for them whenever they want, when really that's not the case.
yeah, and if they think that it's one-to-one backed, it's probably going to change their, spending behaviors. It's going to change prices in the economy. And then you have the bank, lending out, and these depositors are spending in a way that they think that they're not lending out, like they think it's fully reserved. So that could kind of change the difference between the lending and the actual accumulated savings of these depositors, which has other bigger term consequences in terms of boom bust cycles. It just seems like the underlying cause of this is fractional reserve banking. And Safe, I think you wrote a thread and you said something like fractional reserve banking would not survive in a real free market. It currently only exists because the Fed is a cartel with a monopoly on banking and currency, which effectively taxes full reserve banks to subsidize fractional reserve banking scams. And so I wanted you to go into that a little bit because I think it's an important point.
Yeah, I think there was a lot of discussion at that point, as we were saying earlier, that people were waking up to the idea that why can't we just have banks that work? Like it's, some of these VCs were coming up with this idea as thinking of themselves as having invented the new Facebook. Like, why don't we just do a bank that doesn't go and gamble with the money? And obviously, if you lived in a planet where this didn't exist, coming up with an idea like that is really great. If you could come through with the execution, like Satoshi did, yeah, it really is a great idea. I can understand where the sentiment comes from, but ultimately, it got people thinking: why can't we just have this? Why can't we just have this very simple service for banking? And the answer ultimately comes down to the fact that there is no free market in banking. It is a market that's dominated by a monopoly, and it's this weird entity that exists uh, uh, beyond normal calculations of politics and economics and special interests. It's just out there, and it operates, and it decides who gets to be a bank and who does not. And we saw, Caitlin Long had an application for a bank that got refused. And there was this other bank, which I wrote about in the Fiat Standard in my second book, the Narrow Bank. And all they wanted to do was just take their money and take the customer's money and put it in the Fed, basically offer the customers an access to the Fed. And the Fed said, no, your customers have to go out to the casino and earn it. You can't just take your. It's like you go and you mine in the mines all day, and then you just want to go home and buy some food and feed your kids. They tell you no, the blackjack table first. You have to go and gamble that money at the company, at the mine's own casino, which is the financial market in this case, and make a return that beats 98% of hedge funds to beat inflation over 10 years. This is just how it works. And I think it's quite telling that none of these VCs have come up with any kind of serious ideas about um, competing on the market for banking since then. It's been a few weeks now, or maybe more than a month, I think, since this drama was unfolding, and we're not hearing much about the new disruptors in the banking industry. It's quite clearly an oligopolic structure, and it's continually getting more and more centralized. And it's a long term process that's been ongoing for arguably centuries. But the Federal Reserve obviously exacerbated and hastened it significantly. But yeah, here we are. You have to go to the blackjack table before you can take your money home. And obviously, just like with the blackjack table, the house wins. And that's up until a few years ago, it was sad. Now this is just choice that you make when you refuse Bitcoin.
That's a great way to put it. And I think something I'll just add to what you said there, Saif. Obviously, I agree with you, and obviously you and I and many other Austrian economics influenced people have been talking about this for years, right? This is not new for us. But I think there are a range of interventions that the government does to make this happen, right? It's not just like happening out of nowhere. It's legal tender laws. It's capital gains tax laws. It's implicit and explicit bailout guarantees. The existence of a lender of last resort. If you marry all of these interventions together, this is what we are getting. And so, for example, with the legal tender law aspect, if we were existing in a world where people had to assess and scrutinize different banks, we wouldn't necessarily treat those dollars the same, right? We wouldn't necessarily treat Bank A the same as Bank B, as Bank C, as Bank D. But with legal tender laws, we have to. We are forced to treat them all the same. And so then it creates this race to the bottom, because now we are in an environment of legal counterfeiting, in a sense, right? If Safe or you, Sam, or if I, create more US dollars, we go to jail for that, right? But if these banks create more, it's a legalized, institutionalized form of money creation. And so those banks who are able to print more, well, they can just do better in the system. And so it creates this really bad dynamic where it's just a race to the bottom. And this is one of the fundamentally bad impacts, as outlined by many Austrians, people like Mises, and Guido Hulsmann talks about this in the Ethics of Money Production. There are all kinds of bad impacts that come from things like illegal tender laws.
Yeah, I think Safe calls it fiat mining, right? Where these banks lend out, and that's where kind of new fiat units are created. But right now, we're actually seeing bank lending start to kind of drop off. We're seeing increased banking lending standards in the midst of this banking crisis. You actually have M2 money supply contracting year over year. And at the same time, you got the Fed communicating publicly that, we're going to keep hiking rates. We're going to let things kind of fall. At least they're publicly saying that. And over the years, the consensus has been we want to prevent monetary contractions at all costs. We want to prevent deflation. We want to reflate when anything gets bad. And so, do you think it's even possible for them to do that with these levels? Or will they have to reflate? And how does Bitcoin perform in that environment if these central bankers do the unthinkable and actually let asset prices fall and creative destruction occurs? Like, how would Bitcoin perform in that environment?
Honestly, it's something that continues to be, in my opinion, unproven to the extent in which it actually matters all that much to Bitcoin. I think on the day-to-day charts, then yeah, you definitely see this kind of correlation. But in the long term, there's a serious decoupling, really, in that there's massive outperformance by Bitcoin, which really is, again, a matter of time preference in terms of how you think of it for the long run. Whether you think of this as mattering in the kind of day-to-day trading because you're a high time preference fiat miner, or if you think about it that it doesn't matter how many battles you win. This is a war, and the war is long term, and the daily battles don't matter. And if you think of it this way in the long term, you see that all of these alleged correlations with different financial assets, it's yes, we're correlated in that Bitcoin went up X%, whereas the Dow Jones and the S&P went up a tenth of that. But they both went up. Yeah, but it's very irrelevant compared to the fact that there's a difference in magnitude in terms of the returns, which is what you get in the long term. And that ultimately, in my mind, is the signal among the noise. So I think day-to-day macro stuff probably matters at the margin significantly. It probably helps, drive the FOMO perhaps, and maybe lean in on the bear markets. But it's not really entirely clear to me that all of that stuff matters all that much to Bitcoin, because we've seen different monetary regimes and different monetary problems throughout, and Bitcoin kind of has its own cycles, and it hasn't done anything extraordinary in response to monetary policy, I would say, so far. Even with all of this, here we are with all of the tightening and all of that stuff, Bitcoin is still 30%, which is, as at 30,000, which is a significant percentage over any period in time except for, the last couple of years. So it's on any kind of long-term or medium-term time frame, it's massively kicking the ass of pretty much everything else. So has it really been affected by the monetary policy? I'm still not sure of it, and I'm not sure. I would argue all of that, all of that stuff matters that much compared to the just dynamics of Bitcoin continuing to just be Bitcoin, continuing to operate, and that obviously it helps and it draws attention and all that, but I think I'm not so sure what would happen. And I should also add, like, I've also given up on tea leaf reading the Fed and what the Fed is going to do. Um, I'm just not good at it, and like I'm better at trying to guess what happens at football games. And this is a game that's really boring to follow. Like, I'd much rather follow football than try and watch the Federal Reserve make numbers up from thin air. So I don't know what's going to happen. I have no idea if they're going to continue to hike or if they're going to ease. I must say I'm extremely surprised how far they've gone with the hiking. I thought they'd quiet down very quickly, but they've really surprised me with how committed they have been to this. Now, whether they have it in them to continue to maintain this for the long term is going to be interesting to see. I don't know.
Yeah, I'd add just a couple things. So I agree, it's hard to pick exactly which way the Fed is going to go. And on the question of the supposedly evil deflation, right? There's two different types of deflation. There's the growth deflation, as in the cost of the goods that we buy is coming down over time. If you look at the computer industry, technology, you might see that. And then what is quote unquote the bad deflation? It's credit deflation or credit collapse, right? Deflation. And so this is when, let's say, there's not a lot of new loans being issued out and a lot of loans are being paid off. And that's where we're seeing, as you mentioned, to start this question off, around the M2 money supply going down. So I think from the, there's what should happen, right? What should happen is, abolish the Fed, take away legal tender laws, let everything go, let the market resolve this, recalibrate back to what is actually sustainable and economical. But of course, we know that's not what's going to happen. What's more likely to happen is that the government needs to have cheap debt because they just fundamentally cannot afford the rates to stay this high for a very long time. And I think they just fundamentally cannot afford the rates to just keep rising. And so by hook or crook, I think they will eventually have to. Now, the Fed tea leaves reading as to when that happens, I don't know, but I just think there's just no way they can sustain the rates going this high, because eventually it just becomes too large a fraction of government, quote unquote revenue, but really, theft. But never mind that. But so it just becomes too large a fraction of their income. They just can't afford it, quite literally. And so I think they have to turn it around at some point. When that some point is, we don't know. But at the same time, I agree with Saif that Bitcoin marches to the beat of its own drum. It is just there. It's just this parallel system. There's a bunch of people just adopting it. Now, yes, we have every, few years, we have a cycle. Now, whether you want to call it a 4-year cycle or not, I think it's fair to say we've seen this cycle dynamic happen, right? And, if you look back over the years of Bitcoin, we've seen this pattern where it's sort of like 3 years up, 1 year down, and then another 3 years up and 1 year down. Now, we don't know. There's no guarantees about what the future holds, but it certainly seems interesting that we see this cycle dynamic to it. And nevertheless, averaging out across all of those cycles, you have vastly outperformed the S&P or various other comparatives that you could have been invested in. You've outperformed gold, you've outperformed bonds, you've outperformed property, you've outperformed stock indices. So as long as you've had, let's say, a 4 or 5 year minimum horizon, you're killing it with Bitcoin. So I think that's the short answer.
Lower your time preference. Yeah, I saw the treasury data that came out. They spent $679 billion in the first quarter of the year alone, and the annual cost to service the U.S. debt, estimated annual cost to service the U.S. debt, is about to exceed $800 trillion as of the end of March, and they think that's going to top $1 trillion, which would make it the number one expense for the treasury, is the interest on its own debt. So it seems like the printing is inevitable. And so if the printing is inevitable, and you look at like all the other fiat currencies around the world more globally, they just keep printing and the debt keeps piling up. And why haven't we seen as many hyperinflationary events in these fiat currencies? I mean, we've seen Argentina, Turkey, Lebanon, Zimbabwe, but not in the vast majority of currencies. And I was wondering if you guys had any thoughts around that.
Sure. Well, I think one way to think about it is maybe it comes down to like a lot of people are just dollarizing. You know, like that's kind of now that's not what we want to see. We want to see Bitcoinizing, but I think longer term, that's essentially my thought on what's happening is that's kind of what we've seen, right? And I think another interesting way people try to escape is they might try to take a loan or they might try to escape into property. And so, as an example, we see people try to buy overseas property as a way to save their wealth. We see that, you know, we see wealthy Chinese people doing that. We see wealthy Russian people doing that. We see certain real estate markets just going crazy around the world. Hong Kong, Canada, Vancouver, you know, to name a few examples. So that's a few ideas. Safe, do you want to pick back up?
Yeah, I mean, I think globally, realistically, there's the more that I think about it, it seems to me like it's like the situation with Bitcoin and the shitcoins, in that all of the other fiat currencies are strictly shittier versions of the US dollar. So when I was discussing this in the fiat standard, it gave me a way of thinking of this in a more uh, practical way. And I think the idea there is that as long as as long as everybody's using the U.S. banking system for the clearance of money, and as long as they have the most liquid network for clearance, then all of the other coins are like basically second layer solutions on top of the dollar, just a way for people. It's better to understand that the global money is the dollar. That's the native token of the entire fiat system. And then you have local, basically, knockoff dollars, wherein the local central bank has a monopoly on providing the local residents with the dollar. And they take the dollars, they put them in their central bank, and then they wrap them into shittier, cheaper knockoffs, basically, which are the local fiat currencies, where they give the people the US dollar with all of its flaws, plus a sparkling of local country risk. So you're getting robbed at the international level of somewhere in the tune of an average of about 7-8% over 60 years. That's what the US M2, if we're going to take the M2 as an indicator. And, you know, so you could argue, fiat people love to argue about which is the correct form of money. Ultimately, it doesn't matter. They're all going to more or less grow by sort of similar magnitudes. In the very long term, the annual growth rate is small little variations in the annual growth rate, in the compound annual growth rate over a very long period, show up very significantly towards the end. So you could argue about 7 or 8 or 6 or 5, but you can't really argue it's any less than 5 in terms of the money supply with whichever measure you choose, or that it's much more than 10% or so. It's likely somewhere in that range. And in around that range, you're getting robbed at that level on the US dollar, but then also you have to add it in locally where you're being offered an enormously inferior alternative to the dollar, which is robbing you to the tune of another 5 if you're very lucky, but most likely 10, 15, 20% on top of the US dollar robbery.
Mhm.
Plus, there's all the country risk, which is, if you piss off the US government, then you get kicked off of the fiat network and your currency devalues, or, all kinds of bad things happen to your government and to your government spending. And of course, the main one is that your spending then is tied into your government. And so then they control everything you spend, and they are controlled in turn by the United States. And you have to enter into this giant single point of failure system where you're just held ransom by these people.
Mhm. Yeah, and then the people of those countries try to escape in various ways. One of them's dollars. One of them could be Bitcoin, gold, real estate, like you guys said, that going into hard assets, all kinds of ways. I was wondering, like, you
Yeah, and
guys
I
both
think, like,
have, yeah.
I would say, realistically, then, to go back to your question, I think we're going to see a lot more dollarization. Like, I very much believe there's just. I think that the interesting thing is not so much why the dollar is so strong relative to other fiat currencies, as much as it is why do other fiat currencies even exist? Like, what is the point of these things even? And
Hmm.
now with increasing technological access. With increasing trade, trade is increasing at a very high frequency all over the world, and people are being able to move around and find solutions. And Bitcoin obviously is one of these solutions. I think it's going to become more difficult to suppress people in these countries from choosing to find another way of getting into the dollar, more or less. And I think it's really going to be, in the long run, ultimately, like there's no serious competition for the US dollar. The euro is essentially it's a puppet state of the US, and they have US dollars in their reserves, and like the central banks work together. So it's not entirely, it's not in any meaningful sense an alternative. Again, it's a second layer. It's one of the better second layers, um, but it's not going to be an alternative. The Chinese yuan is also a non-starter because China doesn't have open capital markets, and China wants enormous amounts of financial surveillance to control payments. So they're highly unlikely to offer a compelling alternative to serious amounts of money and capital allocators. The treasury market is still king for the time being. However, so I think, in the US versus world scenario, I think it's just going to continue to be the US and its allies who have their propped up currencies while everybody else continues to use the dollar on the black market. And the black market increasingly becomes more powerful. So in Lebanon, basically the entire economy is dollarized. And I think we're going to see more and more of that all over the world. And but ultimately, I still think that's also going to still lead to a lot of Bitcoinization. I think in the long run, people who are going to upgrade from various fiat shitcoins to the dollar are going to very quickly eventually get the upgrade to Bitcoin, because it's kind of similar. It's just a million times better.
Yeah, and something you said there, Safe, around why do these alternative fiat currencies exist? And of course, as you and I both know, these currencies do not exist for an economic reason. They exist for a political reason. Right? It's because obviously the state benefits from control over credit. If the state does not take control, and there's actually a really great essay for people who want to, it's called Why the State Demands Control of Money by Hans Hermann Hoppe. You can find it if you search it, probably on the Mises Institute website. But the basic gist of it is, if you are a state and you do not have control of the money, you are beholden to the banks for credit. But if you control the money, now you can control the banks. You can have the banks dependent on you, and you can now get cheap credit, which is massive. It allows you to expand your enterprise, quote unquote, enterprise, and it allows you to offer more, quote unquote, free goodies. And so there's this really unholy alliance in a way where states demand control because so long as they can avoid the worst, they can avoid hyperinflation, they get all this extra control. And if you are there's a reason that that it benefits you if you are a politician or a bureaucrat in the fiat system to have some control over your money. Now, we've seen some countries go overboard and they've lost all control, right? So Argentina, Zimbabwe, etc. But what happens, I think, is that in those countries where they still have enough control on the printing that they haven't hyperinflated and they are still able to borrow in their own currency, these are the ones who can massively expand beyond what would otherwise be feasible. And so I think that's perhaps some political explanation as to why things are going this way. And of course, Bitcoinization, I think, is the answer for many people around the world. It's just that a lot of people are not familiar with it yet, but it just takes time. So I'm seeing this as it's a slow, it's not going to happen tomorrow. It's a slow process of more and more people being familiar with Bitcoin, being willing to hold some savings with Bitcoin, being willing to transact with Bitcoin, and over time, it just creates this parallel alternative. And I think it's fair to say it is growing, right? As we speak today, April 2023, there's probably more merchants who accept Bitcoin. There's probably more people who save with Bitcoin, than historically. And so I think it's just a slow process. It's hard to predict exactly when. I can't give you an exact day. Bitcoin, the world is going to Bitcoinize in 2035. I can't tell you that, but it's just a slow process that will happen over time.
Well, I'm curious. Stefan, you have ties to Sri Lanka. I believe you have family there, and
Yeah.
their inflation rate's over 50% year over year. Safe, obviously, Lebanon is going through their own currency problems right now, to say the least. Um, have you guys gotten more family members or friends reaching out about Bitcoin? Is it too early? Maybe Safe is Lebanon so dollarized that they're not. It's not as like they already have a solution that they're leaning on right now, or where's Bitcoin in the picture right now when it comes to maybe family and friends in those countries?
Sure. Yeah, I can give a couple examples. So, actually, in Sri Lanka, there are some shops, and there's an area called Ella in Sri Lanka. It's like a tourist area, and they are having Bitcoin and Lightning meetups. And there are, there's small
Yeah.
elements of grassroots there. However, in terms of when I talk to family and friends in Sri Lanka, they are often stuck. And in some cases, it's hard to blame them, right? It's because they're living so hand to mouth that they don't have a lot that they can save. And Bitcoin is very useful if you are able to be solvent over a 5-year period that you can hold, that you can buy some Bitcoin and hold it for 5 years. But if you're not really able to save very much, it's just difficult. And also, there's a mindset shift as well. Coming back to what I was saying about familiarity, if you talk to a typical Sri Lankan, as an example, and they get money, their first instinct to save that would probably be, oh, I need to get a property. I need to own some physical property, because that's how they're thinking of it. They're thinking of it like, oh, okay, maybe I'll get they might think about saving up some Sri Lankan rupees and then think, oh, I'm going to buy some property with this. That's just like a typical way. And I think some of that is cultural, and that's, it takes decades to create this kind of environment. And so it's not going to fix in soon either.
Yeah.
But I think what will change that, though, is that Bitcoin is so dramatically better than fiat money that once people have enough time and exposure to it, they will upgrade. But it's just early, right? Because as we speak today, Bitcoin's overall market cap is something like 560 billion, something like that. It's tiny on the global stage. Of course, I believe it'll massively grow, but it's just small relative.
Yeah, I think in Lebanon, I would say I think it's the amount of interest is much larger. The number of people that are interested is far larger than what it was 5 years ago. But I guess it's like that everywhere. I would say it got a major boost in Lebanon relatively over the last couple of years because people have had to look into this stuff. And a lot of people use USDT as well, and that's getting them curious about Bitcoin. And people are beginning to get it. Like, I mean, it's still not huge. There isn't much of a Bitcoin economy in Lebanon, but it's still much larger than what it was a few years ago. That's ultimately what I think matters in the long run. It continues to grow because people who get into this kind of system benefit from it, and it increases over time.
Yeah, it makes a lot of sense. People turn into it out of necessity in those countries. And hopefully Bitcoin is just going to keep trucking along and it'll just be there for them when they need it. So that's the more important long picture. Saif, I wanted to ask you about something, and you brought it up, and I thought it was pretty fantastic analogy. And you talked about how the boom bust cycle in the banking system caused by credit expansion and contraction can be thought of as the fiat standards harsh difficulty adjustment, essentially.
I think the reason it just continues to trudge along and survive is because traditionally, the way that the credit system and the fiat system works is that um, money is created when credit is made and when loans are generated. But at the same time, money is effectively destroyed when loans are paid back or default happens. And so the money supply contracts and expands with credit creation and destruction, respectively. And so, therefore, this is kind of the difficulty adjustment. This is what prevents money creation from taking off in an uncontrollable way in credit finance systems. I think this is kind of this is why it really I say in the fiat standard, like you'd think initially, oh wow, governments have access to money, and we know how if you're familiar with the last 10 years of history and you're trying to think about the fiat standard of the last 100 years, you'd think, yeah, well, we know how governments handle money. They've had it for 100 years. I mean, there's going to be a lot of hyperinflations, but really, there's not that many, in terms of a complete collapse of the value of money. It doesn't quite happen because the money creation is usually done by credit creation. And so, therefore, it is self correcting naturally because when you issue too much credit, let's say there's a manipulation of interest rates downwards and a generation of all kinds of what Mises calls circulation credit, so fake money basically, and you're lending out a lot of people to go and do all kinds of things. Well, most likely, these kind of things are immediately going to start going bankrupt. So if you give a lot of money to people to invest in the computer industry, and there's not enough resources to go around, these people get the credit based on the old prices before the credit expansion, where they expected they could, all these companies thought they could hire all the talents that they need and buy all the machines that they need at the prevailing prices. But then when they all got the cheap credit and they started buying those things, the price of those things went up, and now they could no longer afford it, and so they all go bankrupt. Well, what happens when they all go bankrupt? What happens to the money supply? It contracts.
Tracks.
And so that's why money creation doesn't quite get out of hand. There's always, it's self-correcting in a sense, because the more credit you give out, the more likely you are to be generating these malinvestments, which end up with premature liquidation, therefore leading to destruction of the money supply. And I think this is really the best way to understand why the money supply doesn't increase too much, even though you would expect it to increase perhaps more, given the kind of people that are in power. It's because generally it's through credit creation. In the cases where you actually get hyperinflation, the hyperinflation comes along because of literal money printing. I don't have exact numbers on how much of the instances of hyperinflation, how many of them were brought about by money printing. But it is money printing in the case of, say, Lebanon, in the case of Zimbabwe, in the case of Argentina. There is an actual physical money supply issue, wherein at some point the banking system is not working. It's not giving the government what they want. It's not allowing them to continue to keep the Ponzi scheme going. And so they go into the central bank and they start running the printers. And that's when the currency truly collapses. Like, this is what happened in Lebanon. This is what happened in most of the cases of hyperinflation. That's the only way that you can get this kind of sustained, irreversible increase in the money supply that causes a complete destruction in the value of the currency, wherein the value of the currency drops by 80-90% versus the dollar in something like a year or so.
And one way to think about that, and I totally agree with Saif there, I think it's an interesting dynamic where in some of the fiat fractional reserve systems around the world, they have this almost speed bump or speed, check at least on the really crazy levels of inflation. Now, of course, you're still getting wrecked at, let's call it 5 to 20%, even on even on a good day, in a good year, let's say. But there's this dynamic where it's first loan and spend, right? That's kind of this loan dynamic. And then once you shift from loan and spend into print and spend, that's when the real hyperinflation comes, right? Because there's no longer this kind of check of banks that need to find a creditworthy individual to give out a loan and so on. That's where we start to see the really big inflation numbers in, let's call it, Argentina, Zimbabwe, Venezuela, etc. And so I think that's the difference in the dynamic. It's in one aspect of it, it's loan and spend, and that's kind of, there's still a little bit of a check on how high the inflation goes, but once you get to print and spend, it's all bets are off.
Yeah, that's when the train has really gone off track and is careering at full speed, and there are no good options left. I think the interesting thing about this is that if you think about the implications of what happens if they introduce central bank digital currencies, and this is kind of the conclusion of the fiat standard in terms of how the two currencies deal with one another, is that if the fiat system continues to move towards more universal basic income, central bank digital currency, then you're getting rid of that credit creation system. You're effectively neutering the banking system, perhaps, and turning money supply into more and more a creation of fiat. In a way, it's digital, so it's similar to credit money creation, and it might superficially appear to people who buy the fiat Kool-Aid that it is similar, but it is very different because it's similar to the physical printing of money that you see in places like Lebanon, Zimbabwe, and Argentina, in that you're actually creating money and just handing it out, and it's going into people's pockets, and they're out there, and they're going to spend it, and they're going to start buying their day-to-day goods, and the price of those goods is going to go up. And that's just how it happens with physical money. CBDC is just basically bringing that to the digital realm. They're uninventing digital scarcity, basically. That's what CBDCs do. They're bringing us back to basically um, having the possibility of having hyperinflation. They're undoing the benefit of Bitcoin and even the kind of fiat credit system, which is a check against a hyperinflation because of this kind of credit creation and destruction difficulty adjustment.
Yeah.
But it's I think with the CBDC, we're going to see a lot more inflation, is the kind of conclusion. And I think, like with everything, that is another great reason why it might make sense to get some Bitcoin.
One thing I want to add as well, I think there's a cultural component to this. I don't know, Saifedean, you've been talking and writing about this for years. I've been talking and been writing about this for years. There is a cultural element to this inflation. It causes a cultural degeneration in a sense because the population becomes more dependent on government largesse, welfare statism, warfare statism. And what we see in some of these countries is a dynamic where they do not want the welfare state to stop. So, for example, in Argentina, this is something I've heard and read about, which is that people understand there's a very high inflation, right? They understand their money is like it's like monetary hot potatoes, but they also at the same time want a large welfare state, and so there's no way to make both ends meet. And so, in order to sustain that large welfare state, you need a lot of printing. And so I think that's also a dynamic that we are going to see in various countries around the world as we see more cultural degeneration, we see more dependence on the state, on stimmy checks, on all these kinds of things. We're going to see that, sadly, right? It's not something we are happy to see, of course, but it's something that I think we will see is more dependence on the state, right? And we see this kind of reduction of the role for the family, for the community, and things like this, and more reliance on the state. And so I think that is a cultural trend that almost puts these countries into a downwards vicious spiral.
If I were to kind of give you a view of what it looks like deeper into the tunnel of despair of inflation, looking at a place like Lebanon, where now there's no more juice left in the orange, it's been squeezed to its fullest. Now it's got to a very interesting point wherein essentially the parasites who ran on the monetary system and benefited from it can no longer benefit from it. And in particular, the government employees. This is really the main issue. Obviously, here, like pretty much everywhere in the world, there's a massively bloated public sector, although I would say beyond the rest of the world in very real ways. I mean, the electricity company famously has thousands of employees, I think, who've never set foot in the electricity company. They just receive a salary. It's a monopoly, obviously, so you can imagine how that works out. So in a place like that, what you see is that you have thousands of employees getting salaries for not doing any work. And this was obviously a great gig during the Ponzi heydays. But now when the Ponzi's gone, these people are faced with economic reality, like in a very serious way. If you continue to rely on your government paycheck, you're getting very, very little real money. You're getting it and you can go and spend it, and then immediately the price rises. Every time they raise public sector salaries, the prices rise almost immediately. So what you see is that people need to figure out a way to get around those things and to go and actually do real jobs um, outside of the public sector. In a sense, it's painful, but it is kind of how markets correct themselves. So you could expect you'll see likely more of that, perhaps. Um, but as I said earlier, deeper down the tunnel of despair.
Yeah. People will actually have to be productive. So I guess that's one positive. No, and I agree with you, Stefan. Like the welfare state will grow as the cost of living outpaces people's wages, and they'll just keep coming to the government. And they've gotten stimmy checks before, so the dam's kind of open there. And CBDC would remove all constraints to credit and that difficulty adjustment that you talked about, Safe. So it would be effectively more direct printing that goes directly into their pockets through UBI, through stimmy checks. And that's maybe how we could get to a more hyperinflationary period. But Safe, you did propose a way that Bitcoin could kind of prevent a hyperinflation, or at least make the transition more peaceful, which is something that I really liked. And you said Bitcoin could be like someone skillfully dismantling the fiat house of cards into a deck of cards by removing each set of two cards leaning on each other at the same time, the card of fiat demand and the card of fiat supply. That's how you take down the house of cards. That's how you prevent it from crashing down. And I would love it if you just kind of expand on that, because I think it's kind of hopeful that Bitcoin could kind of operate alongside fiat and actually help kind of slowly dismantle it instead of this kind of more doomsday crash scenario.
Yeah, I think as I was saying earlier about the kind of difficulty adjustment in fiat. So as I was kind of concluding the book, I realized like this can go on, and it's going to continue to devalue. You're not going to get hyperinflation, but the money supply, the money is going to continue to lose value as it is designed to do. You can argue about 1%, 2%, 3%, 5, 6, 7, 8. We're arguing numbers here, but ultimately nobody disagrees that the money is losing value. And on the other hand, Bitcoin has number go up technology, wherein the money is gaining value. So, you can keep extrapolating this. It might be a year or 10 or 100. Ultimately, that dynamic, I think, because of just the scarcity of Bitcoin and the profligacy of the creation of the fiat money, is going to likely continue for a while. And I think as long as you have this dynamic wherein credit is being created in that way and destroyed in that way, you're not going to get these massive hyperinflationary collapses of fiat money, but you're just going to witness the fiat economy um, grow less and less as a percentage of the global economy. Which is, if you think of Bitcoin as a global economy, it's been increasing as a percentage of the global economy over the last 14 years. Extrapolate that further. Nobody really has a magic ball to tell how fast and how often we get there, how fast we get there. But it depends on how much credit creation you have, how much credit destruction you have. But if you were to look at the past 60 years, there's no reason why it can't go on for another 60 years, perhaps, wherein you have in these kind of well-run, relatively countries, 7, 8, 9% per year increase of the money supply. And then over time, the value of that economy continues to decline, whereas the value of the Bitcoin economy continues to grow because people who put wealth in Bitcoin witness it appreciating in real terms because the supply is only increasing very little. So over time, effectively, there's no need for this to be any kind of cataclysmic event. There's just in the same way that computers took over market share from typewriters. People continued to use typewriters, and people started using computers. And over time, more and more people realized, yeah, no, I could just get myself a computer and a printer, or sometimes not even a printer. But over time, the typewriter industry kind of went out of business, and the computer industry grew to become much larger. It wasn't cataclysmic. Some people lost some money in typewriter businesses, but generally, if you're a capitalist in a typewriter, investing in a typewriter company, you're taking on risk. So it's generally, this is how the market handles disruption. Slowly over time, um, the people who are into typewriting, whether they're typewriters or producers of typewriting or people who buy those things, one by one, they make their way to the new economy, and eventually they benefit from the increase in productivity. And I think we could see something similar with Bitcoin and fiat. The fiat economy becomes progressively a smaller thing as the Bitcoin economy continues to grow. If you accept, the premise that Bitcoin continues to grow, obviously, but if you do, then it is possible that this happens. I think there's no reason why Bitcoin would cause hyperinflation, because I think, remember earlier in the book, I was saying that the way that fiat creates money, fiat mining happens, is through the creation of credit. And so, therefore, um, when people start using Bitcoin as a form of saving, they become less likely to take out credit. And perhaps more importantly, they become less likely to buy credit instruments as a form of saving. In other words, buying bonds. So Bitcoin decreases the supply of fiat as well as decreasing the demand for fiat. So people think, oh, everyone's going to dump their dollars and buy Bitcoin, and the price of Bitcoin is going to go to the moon, and the price of the dollar is going to go to zero. Well, nobody really has any dollars. I mean, obviously, a lot of people have a lot of dollars. There's a ton of dollars out there, and they're always making more. But really, the people who have significant wealth have negative fiat balances. So the richest people in the world, Jeff Bezos doesn't have $120 billion of cash or whatever it is sitting in a vault somewhere in Amazon headquarters. He's got stocks and credit instruments. He doesn't have liquid cash. And so if Jeff Bezos was to get rid of his dollars because he's afraid of hyperinflation, yeah, I'm sure he'll sell several million, maybe even billions. Who knows? I doubt he's got a billion in cash, but he'll sell some of that. So that would, decrease the demand for dollars in a sense. But most likely he's got a tiny fraction in dollars. Most likely what he's going to sell, serious money, the rich people and the institutions that have the vast majority of money, they don't hold it in cash. They hold debt. And so if they shift to Bitcoin, they drop their bonds, they drop their denominated bonds and hold Bitcoin. That is far more economically significant than them dropping their checking account balances. Because you could be a billionaire and your checking account is like, I don't know, I'm not a billionaire myself, so I don't know, I wouldn't even know. But, it could be a few $1,000,000, which is relatively insignificant compared to the more serious amount of assets you would have in bonds. And so, if these billionaires and large asset owners and large asset allocators and financial institutions and institutional investors and sovereign wealth funds and so on, if these people start shifting away from holding, if we do witness a shift away from dollars to Bitcoin, it's not going to be most significant that they're shifting out their checking account. It's going to be far more significant that they're shifting out their debt holdings. And so
Yeah.
they are reducing the creation of fiat as well as the demand for it. So they're getting rid of their checking account, which is likely insignificant compared to the amount of dollar denominated debt instruments, essentially. And so the treasury on its own is about 25, $26 trillion or so, or something like that. And then, other credit and debt instruments are many dozens of trillions of dollars more. So if Bitcoin eats into that, which you would expect it to, because I don't think it's just going to continue to eat from pocket cash. It's eating away. If you ask what Bitcoiners are doing, they're diversifying not out of their pocket change, not out of their checking account. They're diversifying out of their savings account. I mean, to be fair, a lot of it I'm sure would have stayed on checking accounts. But I think a lot of it as well is, somebody like Saylor, which is ultimately we're talking about magnitudes. He would have been holding government bonds. This is what he would have been holding if he wasn't holding Bitcoin. This is what he was usually holding before interest rates crashed. So, um, in this regard, I think if you continue with a credit based system, I know I've gone on forever on this, but I'm trying to summarize like a lot of chapters of the fiat standard. I may not be doing it justice, so I'd urge you to pick it up and read it. Um, but the summary of all of this is that Bitcoin, more significantly than taking away the demand for dollars, it takes away the demand. It takes away the supply creation mechanism of dollars by disincentivizing people from a buying into debt, in other words, lending money out, and taking out loans. And so you stop taking out a million loans as a Bitcoiner and you start just living out of savings. And I think this becomes more and more common. And so, therefore, less fiat debt is created. And therefore, you don't get a hyperinflationary situation. In fact, you get, the continued, what I would say is devaluation of fiat, because ultimately they're not going to get it, they're not going to let it get negative in terms of its supply creation, because governments are still going to take advantage of it and print money and hand out money to their cronies. But there's going to be a lot of money supply destruction, I think, because of, on the one hand, what we mentioned earlier in terms of credit market failures. But on the other hand, if Bitcoin is rising, and this is the premise here that we begin with, if Bitcoin rises, then a lot of that demand for credit creation is going to go to buying Bitcoin. And so therefore, you just witness, like with the computers and typewriters, you witness an increase in the size of the computer industry or computer based money industry, the Bitcoin, and a slow ebbing away of value in the fiat economy. And eventually people get the hint. And I think, perhaps the kind of rose tinted glasses way of looking at it is that as soon as you realize what is going on, why get angry? You just join Bitcoin. And I think this is like, as long as you're asleep and you're happy to play along and you believe your local fiat overlords' propaganda about inflation being transitory and tiny, then things are fine for you and you have no reason to get angry. As soon as you figure out what's going on, you could get angry or you could start stacking sats, which is a much more productive use of your energies than anger. And so, therefore, I think, similarly, like if you're into the typewriter industry, like if you're an investor in typewriter industry and you get what's going on, you're not going to go out there and destroy Apple and Hewlett Packard and IBM. You're going to invest in them and make money. Like it's just, here's what's going on. You get it. So I think this is kind of my rosy scenario where how Bitcoin and fiat coexist for a while, and Bitcoin continues to rise, and fiat is, slowly taken to its resting place of economic insignificance, where less and less economically significant people continue to work in and for governments, doing less and less consequential things over time, and getting paid in less and less valuable little fiat tokens and playing them, putting them in their casinos and slot machines of financial markets over time, while all the grown-ups move on to real hard money. But I should say
that was great.
I still should say, I still end the book by saying, like, this becomes less and less likely the more we are likely to see things like the central bank digital currencies, because they just make this a moot point, because it's no longer about credit creation. They're just going to print money and give everybody all the money that they think that they deserve. In which case, fasten your seatbelts. All of these rosy scenarios are not going to come good. Who knows? We'll see.
Yeah.
One thing I'd add is I just think we are going to see Bitcoiners become more wealthy, more influential, and be able to think and act more clearly. And this is just something that will happen over the longer term. And so, as other people see that, there's a social feedback loop. And so people will see that and think, oh, wow, hang on, what's he doing? Oh, it's working out pretty well for him. I'm going to start doing that too. And people copy each other, right? Rightly or wrongly, they just copy what other people do, because that's what a lot of people that's just how they think. But if you're a thinking individual, you're able to think clearly and critically for yourself. You'll look and assess your options, and you'll see, wow, hold on, this thing is too useful not to be adopted. It's too useful, it's too powerful, it's too scarce that it won't be adopted. And we're just seeing more and more people adopt this thing. So if you're aware, you'll start stacking Bitcoin, and you'll start to benefit from that over the long run. What happens? Other people will start to see that, they'll copy you, and it'll just become a self-reinforcing feedback loop.
Yeah, it's like I think Safe said it. It's difficult to insulate yourself against the risk of somebody else using a money that's harder than yours. And so more and more people will wake up to that fact and get drawn to Bitcoin for those exact reasons. I want to finish with just like a real quick so there's this Texas bill discriminating against Bitcoin miners. I'm sure you guys both saw it. There's a New York Times piece spreading disinformation about Bitcoin's energy use again. So I want to play a little game here. Like if you guys were dropped in to the New York Times or to the Texas Senate, and you had 1 minute to tell them everything you wanted to say, what would you say? Let's go to Stefan.
Well, being honest, I don't know. There's a lot that I could tell them. I just think these are the kinds of people where their mindset is just not able to see clearly, right? Their mindset is just so ideologically in this cave that they're not able to leave it, right? But, assuming they were, open to reason, I think it would be worthwhile assessing Bitcoin on net, right? You have to compare the Bitcoin standard against the fiat standard against the gold standard. You can't just look in a vacuum at just this one little negative component that you see as negative and assess and use that to assess what Bitcoin is. Really, you have to look at the standard versus another standard and see, well, what is the cost of the fiat standard? And realistically, it's central banks, it's all of this boom and bust cycle, it's the welfare state, it's the warfare state. Now, there are some people who see that as a good thing, and we won't be able to convince them. So let's focus on the people who we can save.
Yeah.
Yeah, I mean, in the New York Times, I just tell them, you guys are doing great. You're right. Bitcoin is going to boil the oceans, and you should probably stay away from it. And make sure you tell all your readers that Bitcoin is evil and it's best to stay away from it. Keep on at it. At the Texas Senate, I'll just tell them, you guys are stepping on a very slippery slope where you decide that one building in Texas is going to get to decide what other people in all other buildings in Texas get to do with their electricity. And this is just completely nonsensical in a market economy. And this is a very dangerous, slippery slope that will lead you to a place where you need to justify every consumption decision against against essentially a government body. Perhaps it might be parliament, perhaps it might be a bureaucracy or whatever it is. But that that destroys the essential fundamental of the market economy, and it does it in something that is extremely important everywhere in the world, which is fossil fuels or hydrocarbons, I prefer to say. The hydrocarbon industry, which is, and the energy and the electricity industry, which is vital for our modern life. And so it's, and in the case of Texas, it's even more so because it is a very heavily energy dependent place. It's a place that's, I mean, I've been there and I see like they spend a lot of energy there on heating and cooling mainly, and giant cars and lighting and electricity. And it's just a place that's built on abundant, wholesome hydrocarbon energy. And there's no way around it. Like you can't run Dallas and Houston without significant amounts of hydrocarbon energy. And you can't run these places without consuming significant amounts of energy. And I think it's just there's nothing wrong with that. And it's very dangerous if Texas steps onto into a place where energy is viewed as a bad thing and consuming it is viewed as a bad thing. In fact, if you'd like to have energy security, the answer is not to reduce energy consumption. The answer is to increase it, because the more you increase it, the more that the providers are going to have an incentive to provide more and more and more and more of it. I think a good metaphor is bandwidth. Like all of those people who were using bandwidth in the early days of the internet, they ended up essentially stimulating the creation of more and more bandwidth. So today, we have more bandwidth than ever because of the increasing economic incentive for the creation of bandwidth.
Yeah, that's what Bitcoin miners could do, right? They could they have the incentive to mine Bitcoin, consume more energy, which could lead to more human prosperity. So,
which means produce more energy. It's basically
which means produce more. Yep.
It's a subsidy for everybody around the world to produce cheap energy, and it's just going to mean more and more production of cheap energy, and that's a good thing.
Amen. Well, I know it's late there, Saif, and we're running out of time here. So this was a great conversation, guys. I really appreciate you guys coming on the show. Saif, you got a new book coming out, so maybe you could tell us a little bit about your new book and maybe where people can find you, and then we'll throw it to Stephan.
Just fresh off the press, Principles of Economics. I've just made this. I spent the last 4 years working on it. It's been I started this before the Fiat standard, but it took so long, and I worked really hard on it. But it's good. I liked it, if I may say so myself. Pick it up. It's basically an introduction to Austrian economics. 18 chapters on 18 topics, important topics in economics. Kind of a university level introduction to this. What I would like to have learned at a university rather than the Keynesian garbage that I learned. So what is capital? What is a capitalist economy? What is a market economy? Money, the functions of money, how money works, and banking, trade, all of these issues, technology, energy as well, and of course a little bit of Bitcoin as well. So yeah, Principles of Economics is out in June. Amazon will be delivering in June 21. You'll get it from my website earlier. You can pre-order from my website. We'll be delivering sometime in May, depending on where you are in the world. Might be May, might be June, but you'll be getting yours, so by June, basically, from my website or from Amazon. So check it out, Principles of Economics. Saifedean.com/POE is the books page.
Get that book. You're going to learn a lot. I guarantee it. Stephan, where can people find you, man?
Yeah, well, thank you for having me. Of course, I'll be getting a copy of Saif's book myself. I am able to be found at stephanlivera.com. I host one of the world's leading Bitcoin and Austrian economics shows. It's listened to by many people. In fact, earlier, just today, Michael Saylor mentioned that he is a listener of my podcast also. So that was great to hear.
Nice.
So basically, guys, listen to my show. You'll learn a lot about Bitcoin and Austrian economics there. You can find me on the podcast apps, Stephan Livera Podcast. Looking forward to chatting with you guys again soon.
All right, guys. Thanks a lot. You guys both have good evenings, all right?
All right, take care. Thanks a lot.
Bye.
If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.